Imagine this for a moment. You wake up tomorrow, get ready for work like any normal day, but something unexpected happens. An accident, a sudden illness, or something completely out of your control. Now ask yourself one hard question. If you were no longer here, how long could your family survive financially? In America, where mortgages, medical bills, credit cards, and student loans are a normal part of life, one sudden loss of income can turn a stable family into a financial crisis overnight. Funeral costs alone can cross $10,000, and that's just the beginning. Most people avoid thinking about death, but the truth is, life insurance only feels unnecessary until the day your family desperately needs it, and by then, it's already too late to buy it. Life insurance in America is not about fear, and it's not about predicting death. It's about responsibility, planning, and protecting the people who depend on you. Millions of Americans believe life insurance is either too expensive, too complicated, or only meant for the rich. Some think their employer coverage is enough, while others believe insurance is an investment that will make them money. These misunderstandings cause people to make costly mistakes that can follow their families for decades. The reality is simple. Life insurance is one of the most important financial tools in the U.S., yet it is also one of the most misunderstood. In this video, we are going to break down life insurance in America in a clear, simple, and honest way. You will understand what life insurance really is, how it works in the U.S. system, and why it plays such a crucial role in financial planning. We will talk about the different types of life insurance available in America, who actually needs it, how much coverage is enough, and the biggest mistakes people make when buying a policy. Whether you are single, married, a parent, or a business owner, this video will help you make smarter decisions and avoid traps that cost families thousands of dollars. So if you want to protect your loved ones, secure your family's future, and truly understand how life insurance works in America, not sales talk, not agent pressure, but real financial logic, then stay with me till the end. This knowledge may not make you rich, but it can protect everything you've worked so hard to build. Life insurance in America works on a very simple idea. You pay a small amount of money, regularly called a premium, and in return, the insurance company promises to pay a large sum of money called the death benefit to your chosen beneficiary if you pass away during the policy period. You are the policyholder, the person whose life is insured, and your spouse, children, or anyone you choose becomes the beneficiary. This money is generally tax-free in the United States and is meant to replace your income, clear debts, and give your family financial stability at the worst possible time of their lives. Unlike savings, life insurance creates instant financial protection from day one, even if you have only paid a few premiums. For example, someone paying $50 a month could provide $500,000 of protection for their family, which would be impossible to save quickly on their own. Life insurance is especially important in America because of how the financial system is structured. Most families depend on one or two incomes, and expenses do not stop when a person dies. Mortgages, rent, car loans, credit cards, student loans, and daily living costs continue. Medical expenses before death can be extremely high, and funeral costs alone can reach $10,000 to $12,000. Unlike some countries, the U.S. does not provide strong financial support to surviving families. So without life insurance, the burden falls entirely on loved ones. This is why life insurance is not a luxury product in America. It is a core part of responsible financial planning for anyone who has dependents or financial obligations. There are several types of life insurance in America, but the most important ones to understand are term life insurance, whole life insurance, and universal life insurance. Term life insurance is the simplest and most affordable option. It provides coverage for a fixed period, usually 10, 20, or 30 years. If you die during that term, your beneficiary receives the full death benefit. If you outlive the term, the policy expires with no payout. Term insurance is popular because it offers high coverage at a low cost, making it ideal for income replacement, mortgage protection, and raising children. Whole life insurance, on the other hand, provides lifetime coverage and includes a savings component called cash value. Part of your premium goes toward insurance, and part goes into this cash value, which grows slowly over time. Whole life policies are much more expensive and are often marketed as investment products, even though their returns are usually low compared to other investments. Universal life insurance is a more complex version that offers flexible premiums and a cash value linked to interest rates or market performance. But it also carries more risk and complexity, which many people do not fully understand. One of the biggest questions people ask is how much life insurance they actually need. In America, a common rule of thumb is 10 to 15 times your annual income, but this is only a starting point. A better approach is to calculate your family's real needs. This includes replacing your income for several years, paying off major debts like mortgages and loans, covering children's education costs, and accounting for inflation. For example, if someone earns $70,000 a year, has a mortgage, and 2 young children, they may need $700,000 to $1 million in coverage to truly protect their family. Life insurance should be enough to give your loved ones time and financial breathing room, not just cover immediate expenses. Not everyone needs life insurance, but many more people need it than they realize. Married individuals, parents, single earners supporting family members, and business owners almost always need coverage. Even stay-at-home parents often need life insurance because their unpaid work, childcare, household management, and daily support would cost a significant amount of money to replace. On the other hand, someone who is single, has no dependents, and no major debts may not need life insurance at that stage of life. The key factor is not age or wealth, but responsibility and dependence. Many Americans make serious mistakes when buying life insurance, often due to lack of knowledge or bad advice. One common mistake is buying too little coverage to save money, which leaves families underprotected. Another is confusing insurance with investment and purchasing expensive policies that do not match their real needs. Relying only on employer-provided life insurance is also risky, because coverage is usually limited and disappears when you leave your job. People also forget to update beneficiaries after marriage, divorce, or having children, which can lead to legal and emotional problems later. Perhaps the biggest mistake of all is waiting too long. Life insurance becomes more expensive as you age, and health issues can make it difficult or even impossible to qualify later on. When used correctly, life insurance in America is not about death, it is about life. It is about making sure that the people you love can stay in their home, continue their education, and maintain dignity and stability, even when you are no longer there to support them. It is a financial safety net that turns uncertainty into security and panic into protection. Understanding how it works, choosing the right type, and buying the right amount at the right time can make a life-changing difference for the people you leave behind. As we come to the end of this video, it's important to remember that life insurance is not something you buy because you expect something bad to happen. It is something you buy because you care about what happens to the people you love if it does. In America, life insurance is one of the few financial tools that can instantly protect your family's future. No matter your income level or background, you work hard every day to build a better life, to pay your bills, to support your family, and to plan for tomorrow. Life insurance is simply a way of making sure that all of that effort does not disappear overnight because of one unexpected event. It doesn't replace you, but it replaces the financial support your family depends on to survive and move forward. The biggest mistake people make is delaying the decision, thinking they will buy life insurance later. Later often becomes too expensive, too complicated, or too late altogether. Buying the right policy at the right time is an act of responsibility, not fear. For most people, simple and affordable term, life insurance is enough to create strong financial protection. While complex and expensive policies should only be chosen with full understanding, life insurance is not about making money. It is about preventing loss, preserving stability, and giving your family choices instead of burdens during their most difficult moments. If this video helped you understand life insurance in America more clearly, take a moment to reflect on your own situation. Ask yourself who depends on you, what would happen financially if you are gone, and whether your current plan truly protects the people you love. Knowledge is powerful, but action is what creates real security. If you found value in this explanation, support the channel by liking the video, subscribing to Finance Guard, and sharing this with someone who needs to hear it. One simple share could protect a family from financial hardship. Stay informed, plan wisely, and remember life insurance is not for you. It's for the people who matter most in your life.